Yeah, good morning, Phoenix and Colorado, and all of you listening all over the world today. It's the Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and our toll-free number, as if you didn't know, 800-951-0592. The website at allamericangold.com. And, man, do we have a show for you today. Big announcements coming today. Things have changed since Friday. If you're one of those people that believes what you hear on the idiot box, then you're probably not going to like what I have to say today. For those of you that have been frustrated year in and year out about the gold price being artificially suppressed, even though I told you, hey, don't be upset about that. Because when it stops being suppressed, you're just going to have to pay a lot more. You're probably going to like it. So got a great program lined up for you. Wendy's in the back right now. This is how long it takes us now. We're getting ready for the metals plant. And I know the end of the month's not till next week. But we've got to start preparing now. So she's getting all the lists together, and we had to order more boxes. I mean, stuff like that. Getting ready for the metals plan. July starts a new month. Listen, we're still giving the 10% bonus on that as well. And I know a lot of times, we do specials. I'll tell you today, our special today, right? It's going to be over $1,400. Right? And for a lot of people, hey, that puts me out. I don't have that price range. Look into our metals plan. For as little as $100 a month, you're going to get 4 deliveries a year. Right? I like to refer to it, it's the Patriot 401k. It really is. And when you think about gold, and I know, listen, every one of those idiotic financial planners or anybody you call that wants to manage your money, oh, no, don't buy gold. Really? Been better than any investment. Well, I don't know about any. I know it's better than the stock market all the way back to 1971 when we decided that gold was no longer money. Nothing in the debt markets has outperformed gold since 1971. Nothing. And that's Dow's at all-time highs. Still hasn't done it. Right? Go back to 2000. Right? I mean, nothing special about 2000. 2000, turn of the century. New millennial. Gold's destroyed the Dow. But here's the thing. The Dow's kind of at its peak. You know that. I know you know that. Gold's just starting to get the legs back under it, right? The artificially suppressed price because they wanted you, right? Because they got to trick you every day. Every day they have to trick you into thinking that this is for you. It's not. Think about 10,000 people a day retire. All of you should be retiring millionaires, but you're not. If you took out the top 1% of 401ks, just the top 1%, the average person that retires, you don't have $100,000. Like you barely even have 50. You take the average of all the 401ks, even with the 1%ers in it. Right? So what? You got $100,000. They steal from you every single day. And today, a big change happened just from the weekend. When we get back, we're going to talk about what's changed. We got a lot of central bank talk coming up. And then we got some economic data, this time out of the Dallas Federal Reserve. And remember what we did on Friday. Now it's the Dallas Federal. I'm actually going to read to all of you what the CEOs and CFOs were telling the Dallas Federal Reserve in the next segment. But big changes on the move that have made me recalculate my now most likely outcome for gold for the year. It's not going to be 1,500. I don't think 1,600 is going to get it done either, right? The way this is playing out, could we see 17, 18? Could we see a new all-time high? I hate to say that we could. I hope that we don't. I hope it's not till next year. But either way, it's coming. Listen, gold's up 18 right now. Yep, you heard me right. Up 18 more dollars, $1,415. Silver approaching now just under 1550. You silver guys out there, we want to break 1555 and then just start adding 25 cents. If we break 1555, it's going to go 1575. Break 1575, 16 and a quarter, 1650. That's just kind of how the silver charts are playing out. Just kind of 25-cent chunks, and then gold or silver hit an intraday high. I think it was Thursday of 1555. Friday they tried to get it to break that support level that we talked so much about. Didn't do it. Very good sign there as well. So gold's going to pull silver with it, so don't worry about that. 800-951-0592. We'll be back right after the break. 800-951-0592. It's wealth insurance. I'm going to tell you right now, your wealth is under attack. They rob from us every day. That's what this version of a central bank, they're robbers. Right? And I know that's hard for people to understand. They steal from you to give to themselves. Why do you think we have the biggest disparity in income since the last Great Depression? Think it's odd? Think that's an accident? You don't think something bad's going to happen? Last week, what was it, Thursday, Friday? Because you know me. I always tell you, don't take my word for it, even though you should. Jim Cramer, as the Dows are getting ready, I don't know if they'll get to all-time highs or not. It doesn't matter. Not one single CEO, not one, says this quarter is going to be better than the last. Not a single one. It's not going to be better than last year. Of course not last year, right? Everything is getting worse. And anybody out there that believes that the stock market's going higher, you have no clue what's really happening. And I likened this last week. I said it feels like '05 to me. '05 here, Arizona, the housing crash happened before everywhere else. Summer of '05, right? People were still lining up in the desert. By September, the lines were gone. Right. By Christmas, everything had stopped. And, of course, you know the rest of it. So this morning, I'm not thinking this morning's any different than any other morning. Okay? I know the G20's coming up. I know we got a lot of Fed governors going to come out and do some talking. Right? Because they got to telegraph that they're getting ready for the rate cuts. You know what that means, right? You do, right? Right? We don't cut rates because things are good. Okay? Let's get that out of your head. That doesn't happen. We don't cut rates for, it's an insurance cut. No, it's not. If you believe that, then you deserve what you get. They had Art cashing out. For those of you that don't watch the Idiot Box, you don't have to, because I do it for you. And again, the truth is out there. But why am I raising my forecast for gold? He came out this morning and he was talking about the slowdown, was talking about the trade war and the G20 and how, anybody that thinks there's going to be any deal reached is either, number one, an absolute moron or a liar. And unfortunately, I think most of them are liars because I know that these guys have above average intelligence. I know it. There's not going to be any deal Friday. Now, will there be more talks? Maybe. Maybe. I don't know if there is or not. But China did say over the weekend, actually, it was, I either saw it this morning or last night. I can't remember which. Hey, this needs to be a two-way street, U.S. So, yeah, maybe we're going to meet, but the deal that you said we had, we didn't have any deal, and we're not going for that deal. Of course they're not. But that wasn't important. The actual slowdown wasn't important. What he said was, hey, we got a bunch of Fed people talking, including Jay Powell himself this week. The rumor on Wall Street now isn't for a 25% cut in July. He said that's not going to work. That's not going to help. Word is now they're talking about a 50% cut in July, and that's not going to work. That's not going to help. And now Wall Street is planning on up to 4 cuts this year. Got news for you. I want it to help. I don't know if it's going to. So you think about, okay, those are rumors, right? And my guess is the only thing keeping Wall Street together right now is that. We actually got some data out today. Now, we all know the June data, it's been beyond bad. This came out of the Dallas Central Bank. So think about just since last Wednesday. We've heard from New York. We've heard from Philly. We've heard from Chicago. Now, here comes Dallas. Their number, it was bad. And they were expecting it to be bad. The problem was it was much worse than that. It wasn't a -5. It came in at -12. Any reading, obviously negative, is not good. Anything above 0 is bad, or below 0 is bad. But that didn't shock me. I'm going to read you some of the comments that people in their responses. I don't care what the indicators say. Things are slowing down in energy and manufacturing. And oh, by the way, construction is, strong-ish. So that's a polite way of saying, okay, energy bad, manufacturing bad, construction not bad yet, but not great. Customers are shopping every nickel. Remember, these are the wholesale side of things. These are the buying and selling before stuff gets put on the shelf, okay? Quoting and re-quoting. No one wants inventory. Steel prices are dropping like a rock due to lack of demand and way too much capacity. What does that tell you? It's rough waters right now. But then they weren't done. And then they went on and said, really, for the last 60 to 90 days. That was one. How about this one? Chinese tariffs are a big drain on profits. Listen, I'm sorry. And I get it. I don't know the customer. I don't know who said it. But Chinese tariffs equate to $5 billion a month. It can't be that big of a drain. But for certain companies, it probably could be. We want to increase prices July the 1st. And they're worried about what's coming next. This is one of my favorite ones. This is CEOs and CFOs' responses to the Dallas Federal Reserve. Now remember, they don't care. They're not, and if I was in Texas, they wouldn't be calling me, okay? They wouldn't be calling AL Wire Repair. They wouldn't be calling Acclaimed Roofing, right? Or Best Way Insulation, right? They're calling all the big guys. We cannot explain it. But we have gotten stupid slow. Incoming orders lagging way behind last year to date. At this rate, incoming orders will be the lowest in over 15 years. Again, that's before the crash. All of our customers, now remember Kramer, I haven't talked to a single CEO that says things are better. This CEO says all of our customers are complaining about being slow. Perhaps the economy is not in as good condition, you think, as we were led to believe. People are afraid to pull the trigger on projects. Think about this. The rate cuts that I just told you about. Art Cashin says 50 basis points next month. If that's true, gold's going to be over $1,500 and way over. It could be up to $1,600 by next month. Because that'll tell you how bad it really is under the blanket. I know, oh, no, look at Wall Street. No, it's fine all the time. I know. Listen, I know it's hard to you don't want to hear it. I get it. Just because you don't want to hear it doesn't mean it's not true. Be smart. Remember what I've been telling you now for what? Really, really hard now for the last 30 days. Keep putting it away. I'm sorry, it's here. It's not coming. It's here. Right? They're not saying, hey, we got a couple of customers that are slow. No, they're saying all of them. San Antonio, how about this one? San Antonio is about to implement mandatory paid sick time for hourly workers. It's going to put even more pressure on us, right? All these businesses now, right, where they got all these great tax cuts, it didn't help. And they're talking about, hey, San Antonio, they're talking about, whatever their cities, you think about every city in America just getting ready to hammer people. Because you got to remember, The bills don't stop just because there's the slowdown. But again, does this sound like slowdown? By the way, let me tell you what they predicted. Most likely, this is going to result in a major reduction of the workforce. I'm talking about all the issues. It's time we get fair trade. We need everyone working together for the good of the country. Unfortunately, guess what? That's not an option. Prices for raw materials, prices received for finished goods, orders that are received. The only bright spot, there was one. All of those were bad, by the way. Military, there must be, so Texas Federal Reserve must have military apparel. Military apparel appears to be strong for the next 12 months. There you have it. I gave you some good news. We'll be back after the break.
This is the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Mrs. Schlafly was a courageous and articulate voice for traditional values and common sense for more than 70 years. Now, continuing that legacy, the president of Phyllis Schlafly Eagles, Ed Martin.
The U.S. Chamber of Commerce made headlines recently for recommending a 25-cent increase in the federal gas tax. Not only is that a bad idea for American consumers and businesses, but it's a hopelessly outdated idea that doesn't address the day in which we live. In this era of Uber and Lyft, electric and hybrid cars, plus humongous tandem tractor trailers, the gasoline tax is no longer a fair way to pay for our highways. Roads should be funded by those who use them, with variable fees that depend on cost and time of day. The Dulles Greenway in Virginia is an example of a successful private highway which connects Washington Dulles Airport to Leesburg, Virginia. It has an electronic system for collecting tolls from riders. By all measurable standards, it has a much more convenient and efficient access than government-owned highways. In this 21st century, drivers can pay electronically with their smartphones based on their GPS-tracked travel. That efficiency would help deter the massive commuter traffic jams that currently plague our public highways. In case you think the left's idea of a national carbon tax is a viable alternative, think again. A carbon tax is imposed on the amount of carbon in energy sources, primarily fossil fuels. Thus, a carbon tax would be imposed on the suppliers of the energy, particularly oil, coal, and natural gas. But this tax would then be passed on to consumers in the form of higher heating and air conditioning costs and higher gas prices at the pump. That's the kind of thing Hillary Clinton was talking about when she promised to put lots of coal miners out of business. She wanted to hit them with carbon taxes until their industry crumbled. Even today, it doesn't work. Anti-Trump Representative Carlos Curbelo of Florida was defeated for re-election recently after he endorsed the bad idea of a carbon tax. President Trump should learn from these political lessons and stay away from taxes on important resources like gas and coal. Shenanigans like gas taxes and carbon taxes don't play well with the middle-class Americans who just want the government to let them live in freedom. And it's those people who will re-elect Trump in 2020.
This has been the Phyllis Schlafly Report with Ed Martin, president of Phyllis Schlafly Eagles. These culturally relevant commentaries, along with videos, columns, and bulletins, are waiting for you at phyllisschlafly.com. That's phyllisschlafly.com. Plus, you can find, follow, and share our work on Facebook, YouTube, Instagram, and Twitter. Thanks for listening, and join us again for the Phyllis Schlafly Report.
800-951-0592. That is our toll-free number. I'm going to give you a huge opportunity in this market. I saw a guy who was talking about, hey, gold keeps rallying, right? It keeps going up and up. And in case you're just joining us, gold's up, 19 right now. $1,415, $1,416 to the ounce. Remember, what is 1,900? We're going way past that. And I'm worried about how fast it's going to happen because it was a really masterful job of these people trying to convince themselves that they fixed it. But see, the problem that we have now is money only flows one way. Man, is it starting to pour into gold. Just the gold ETF, and the month's not even over. Already 100 metric tons. 100 metric already. It's not over. Have gone into the ETF this month alone. And you start thinking about all the billionaires. But I told you, billionaires don't line up for $100, okay? Billionaires don't line. They wipe their butt with $100. But they're talking about if gold pulls back, and the guy's like, yeah, look for a pull, $1,390. I'm like, what? That's it. And you know what? I laugh, but here's the thing. I don't know if that's going to happen. It's going to be quick. But this is why I'm going to give you the opportunity. This is the best deal that I've run, and I think maybe second or third best deal all time. 1 through 9, 1470. 10 through 19, 1460, 20 or more, 1450. Wait a minute, Double, you didn't tell us what it was. You pick it. An American Gold Eagle, a $20 St. Gaudens, a $20 Liberty. You want to mix or match? I don't care. 1 through 9, 1470. That's $55 over spot, in case you don't know how to do math. If you buy 10 to 19, 1460. 20 or more is $1,450. It's only $35 over the spot price at 800-951-0592. I don't need to tell you that this is what keeps us on there. We've been doing this 23 years because we're the damn best there is. And I sit there and I will say this. This show will run until we sell out of all three items. 1 ounce Gold Eagles, $20 Liberties, $20 Saints. We are now, I just saw the new odds of a rate cut for July. I want to share them with you. 100%. Okay, 100%, there's going to be a cut. Here's what's changed. 60%, say 25 basis points. 40% now are up to 50 basis points. The president came out today and essentially screamed at everybody to buy gold. Listen, I don't know what the ETF inflows are going to be for July. I don't be shocked if we set a record. Don't be shocked if a record is set for inflows in a month. In July. You think about what we've done in June already. You know, if you did 100 metric tons, which they've already done it, that'd be 1,200 metric tons for the year. Right? You do 150 metric tons, 150 metric tons, going to be 1,800 metric tons annualized. Right? All the mined gold in the world plus the scrap gold, it's only about 4,000 tons. Right? Then you throw in all the central bank buying, right? You throw in the fact that just India and China alone, just gold consumption in those two countries is 2,000 metric tons. Yeah. You start adding up, I'm using my fingers, my toes. Looks like shortfall coming in gold. 800-951-0592. The president this morning tweeting out, talking about the Federal Reserve like a stubborn child. We need rate cuts. See, here's the thing that I believe is I think somebody's telling the president the truth. Now, I know he goes out and tells, it's great, right? He's the head cheerleader. But he knows. We need rate cuts and easing. More balance sheet. Remember, we just got done, thought we were selling the balance sheet. Before this year is out, I don't think we're going to have a trade agreement. I think we'll have cut rates by 100 basis points. And the Federal Reserve will either already be starting QE4 or talking about QE4. Could we see $1,900? Could we see a new all-time high in gold before the end of the year? Yes. Do I want it to be? No. I'm having a hard time, though, not seeing 1,700. I just am. I mean, I thought Friday 1,600 was probably likely. Now I'm thinking 17, 18. Said that because of the central bank, we could have had GDP growth of 5%. Now we don't. Jay Powell last week said the case for a rate cut had strengthened. Listen, the economic data that has come in since then, I think guarantees it. I don't think it's a maybe. If the data keeps coming in like this, 50 basis points this time, maybe 50 basis points next time. 800-951-0592. Again, once again, you pick. I don't care. 1 ounce gold eagles, right? The American Gold Eagle, $20 Liberty, $20 Safe. They're all U.S. minted, right? My favorite, all U.S. minted materials. 1 through 9 at $1,470. 10 through 19. If you buy 10 through 19, man, at $1,460, 20 or more. And I think about this. This was the price, $60 in gold ago at least? 20 or more at $1,450. That's now less right now. Yeah, gold's up 1910 for $1,415.30. So that's $34.70 over spot if you buy 20 or even if you buy one. $55 over spot. Are you kidding me? 800-951-0592. I can't listen. It doesn't get better than that. I'll run this show until they're gone. So when you guys want to buy them, I want to sell them, and I'll do more shows when we do. According to Bank of America, I know you want to wait. I know you're worried. You don't know what to do. Listen, I'm telling you, it's already happened. Don't you see that yet? It's already happened. According to Bank of America, its proprietary bi-weekly truckload diffusion indicator. What? Okay, let me speak English now. Hey, truckers, What's the freight volumes look like for the next 90 days? Not good was the answer, by the way. They knocked in 2 weeks' time down 15%, hit the lowest levels since October 2016. By the way, another 14% decline from the week before. The stunning plunge in U.S. trucking indicator is now down 30% year over year. Okay? Think about this time last year. We have 30% less volume. Period. That's not a slowdown. 21st consecutive and the largest year-over-year decline in the history of the survey. What don't you understand? And again, this is why all of a sudden Wall Street's saying 60-40 on a 50% cut. You know, and remember, I'll go back. Remember what Jim Cramer said. He hadn't talked to one single CEO. By the way, if you're a new customer, it's so easy. Just call the 800 number. Call 800-951-0592. Wendy's going to answer it. We got 3 lines open. She's going to answer it. And when she gets to you, she's going to say, you know, how may I help you? And you just tell her, I want the special. She's going to say, okay, great. Tell me what you want. Well, you know what, Wendy? Tell you what. Why don't you give me 10 Gold Eagles, 10 $20 Liberties, and 10 $20 Saints? Right? And she's going to say, great. Here's your total. Right? And by the way, do you pick up or do we ship to you? Anybody? How about this, too? I'll tell you what. I'm going to go one better. Anybody that buys 10 or more, 20 or more, free shipping if you're a guy that we ship to or a person we ship to. Anything over 10, we'll throw in the shipping. But that's it. Then what happens? Well, you pay for it. And then we ship it to you or you pick it up. Right? And that's it. It's over. What about bait and switching me? Not going to happen. What about when I call to order the special, you're going to tell me to buy something else? Nope. Right? She just got off the phone and asked what I told you that it was going to be. Okay, great. Okay, perfect. Boom, boom, boom. Listen, we don't want to be. If you have questions, and great, we'll answer them. But if you know what you're doing, it's like a 2-minute conversation. You could order $100,000 from gold from us in about 2 minutes. I mean, it can be longer if you want. Well, then what, though? Are you going to start calling me all the time and all that? Nope. How many times are you going to call me? None. You going to bombard my email? Nope. We don't even ask for your email. I know, we're a horrible sales company. So I'm just letting you know where we are at right now. The trucking industry, at least from these reports, it's more than just a slowdown. And I think that's why you had Art Cashin today. You had Jim Cramer on Friday. Now the president saying, not only do we need rate cuts, right, we need more easy. Final segment coming up. 800-951-0592. And obviously, you think about the prices, $1,470 all the way down in volume to $1,450. Spot gold at $14.15 to the ounce. And I think about, we got Fed talk. I think all the Fed talk is going to be dovish. The G20 meeting coming on Friday. And I'll just tell you this. What we wanted, it wasn't unreasonable to us. Absolutely unreasonable for a communist country. The problem is this is a country we can't control. They're too big. There's too many of them. I mean, if it was Venezuela or Iran, we can control them. Cuba. Can't control China. And think about this. They would have had to change, I don't even know, a couple thousand of their laws to do what we wanted them to do. It's not going to happen. I don't know. Are we going to get 50 basis points? Doesn't matter. If we don't get 50 basis points this month, we'll get them the next month. Rate cuts are coming, and they're coming in a much bigger fashion than previously thought. Obviously, this is a buyer's market. People looking to sell. Listen, we're buying. We're buying. Just not at prices you're probably going to like. But if you want to, one of the things, when we've done it with a couple of customers, we normally have never done this, but I'm willing to do it today. If you want to put your coins on consignment to get a better price, we can do that. Obviously, if you're selling one coin, two coins, not one. But if you're looking at a large sell, we can help you with that. So when you call and ask and inquire about that, we'll let you know. We'll tell you what we can do. But premiums are way down. It's a great buyer's market. We've had a massive run, and really, I'm sitting there. I'm looking at the data points, the opportunities, and what I think. And now all of a sudden, just from Friday to today, we went from about 10% saying a 50 basis points. We're now at 40%. I don't think the news, again, we got the Dallas news today. It actually got worse. We got some crazy whacked out proprietary index from B of A today that said, hey, trucking volume, it's the worst that we've seen since we've started doing the survey. Now, I don't know when they started doing it, but that was just the number and these were numbers, and I think here's what I liked about it. It was current. They do it every few days. This was a bi-weekly thing, they said, in their numbers from 0 to 90 days. So this is essentially, really, we're talking about third quarter now. Right? We're not talking, fourth quarter ends here in a week. Or second quarter ends in a week. 800-951-0592. 1450, 1460, 1450, right? 1 through 9, 10 through 19, 20 or more. I'll tell you what I'm going to do. I'm going to run this show until we're sold out of them. 800-951-0592. Patriot Radio News Hour. I'll see you when I see you. Take care.